Welcome to Framework Fortune. I'm your host Ben, and it's time for another one of Ben's stock reviews, the series where you leave a stock in the comments below and I'll do a review about them. Before we start, I want to state this video is not investment advice. See the disclaimer below in the description. This video is merely an overview and my opinions on the stock and should have no bearing on your investment decisions. So the company we're looking at today is YRC Worldwide, and this was recommended by viewer Jacob187. Thank you, Jacob, for that suggestion. And we're going to throw this stock into Yahoo Finance, take a look at its website, and then throw it into Thinkorswim and take a look at the technical side and the charts. So as you can see, we're in Yahoo Finance here. We've got YRCW pulled up, and it's currently trading at $1.55 a share. Let's scroll down and look at these statistics and see what we got. So 52-week high of $7.66, 52-week low of $1.29, so it's just right above that 52-week low. See a negative 2% profit margin, 0.27% return on assets, no return on equity, 4.87 billion in revenue, negative 7% quarterly revenue growth, 401 million in gross profit, 32 million in float, so it's pretty low float. 15% held by insiders, 75% held by institutions. So some people who have some big money were willing to invest in this. Maybe we'll figure out why. Balance sheet, total cash 109 million, total debt 1.23 billion. So they only have 100 million in cash and 1 billion in debt. That's a lot of debt compared to their cash. And let's see, operating cash flow 21 million, and then levered free cash flow of 93 million. So I mean, they are making some money, but they're not making enough money to really pay their debt. They're pretty far behind on debt. It looks like no dividend. So far I don't really like the numbers I'm seeing, but there could be a reason for all these negative numbers. Hopefully it's a good reason and not a bad reason. So let's take a look at their website. So here we are on the website. It's not the best website in the world. It's pretty ugly and it's all to the left for some reason. So they need to fix their website, but let's dive into it and find out what they're about. So they are a holding company for a portfolio of successful brands including Holland, New Pen, Yrcw, YRC Freight, and HNRY Logistics. The companies have largest, most comprehensive network in North America. They offer industry-leading expertise in heavyweight shipments and flexible supply chain solutions, ensuring customers can ship industrial, commercial, and retail goods with confidence. And they are headquartered in Overland Park, Kansas. Making North America commerce work by connecting people, places, and information. So this is basically just a shipping company or a holding company of multiple shipping companies. So they've had a lot of awards, it looks like. Yeah, those are all the awards that Holland has had. New Pen, Yrcw, YRC Freight, and YRC Worldwide. YRC Worldwide recognized by Women in Trucking as 2019 top company for women to work for in transportation. That's kind of a good thing. So I don't really need to see too much more because I know it's a shipping company. So let's take a look at some of their actual information. Alright, so here we have their 10K annual report, and let's see what we got going on here. If our relationship with our employees and unions were to deteriorate, we may be faced with labor disruptions or stoppages or general uncertainty by our customers, which could have a material adverse effect on our business, financial condition, and result of operations, result in a loss of customers, and place us at a disadvantage relative to non-union competitors. So all their workers, it looks like, are represented by the Teamsters. All of 2019 they had some net losses, and it's looking to me like they're losing more money than they're making. And you can see here, you can see here, right here on this chart, purple one is DJ Trans Index, which has been moving up, and the S&P 500, which has been moving up, but this stock has been moving down. So that's not really a good thing. See, operation income for YRC was $38 million for the year ended in December 2019, a decrease of $46 million from the same period as 2018. So they decreased in operating income. Operating expenses also decreased. Let's see, primarily due to decreases in purchase, transportation expense, and fuel, operating expenses, and supplies. These decreases were partially offset by increased salaries, wages, and employee benefits. Salary, wages, and employee benefits increased $7.2 million, primarily due to a $21.9 million increase in benefits costs, which was largely driven by a $16.8 million increase in union vacation expense due to restoration of benefits from passage of the new NMFA, and a $2.9 million increase in salary expenses. And they did some things to try to offset those numbers, but so far I really do not like the numbers of this company. It looks like they're heading downhill. This is 2018 compared to 2017. So yeah, their operating revenue decreased. So their revenues have been decreasing. They're having a lot of losses. Alright, there's plenty of information you can find about them on their website. From what I'm seeing though, this company is on a downhill trend, and I'm guessing that's going to reflect on the charts when we put it in Thinkorswim. I don't really know if this is going to be a good long-term investment. They seem to have everything kind of all over the place right now. So let's jump into Thinkorswim and take a look at this. Alright, so this company has been in business since it looks like 1986. And they were kind of moving nice and fluently there for a while. And then you see back here in 2005 they hit this peak, and then they have been dropping ever since. I'm sure there's been reverse stock splits or something to keep this company listed. But yeah, on the max chart you can see this company is way off where it was, and most likely, you know, I don't think this is going to be a very good investment for anybody. So let's look at the year chart. You can see the coronavirus didn't even affect this stock. It is a shipper. And then on the 1 year chart you can see it's on this downtrend. So just a nasty downtrend. Right now it's below all indicators, all these moving averages, so it's very bearish. It does have some support, it looks like, in this $1.29, $1.30 area. I mean, this company does not pay a dividend, so there's no value in the company there. Just massive downtrend and being below all these indicators. And we saw, you know, in their financials that they've been losing revenue. They're having pretty big net losses. They're $1 billion in debt. This company is not a company I would want to touch. I can see no reason to try to invest in this long term right now without some type of reversal happening in the company. It just seems like it's just an old shipping company that just can't get ahead with the times. I mean, you saw their website is garbage. It doesn't even work properly. So I would just stay away from this company totally. There's plenty of other shippers out there and plenty of other companies that are going to be a better investment in my opinion than this. I just don't see any reason, any positivity to even think about investing in this. Now, it has made some moves before in the past, but back in September, you see it moved from 220 all the way up to 474. So, you know, maybe it could possibly be a day trade or a swing trade if you could catch it right with the right strategy. But for long term, I wouldn't want nothing to do with this company.